All right, traders, we've just entered quarter 4 of the year. And if you use these next 3 months properly, you can set yourself up for massive success heading into the new year of 2024 by laying down the proper foundations. With that being said, we're going to try our best to close out this year very, very strong. And we're going to continue to prepare to trade the best setups at the best prices. Within this video, since we are entering a new month and a new quarter, I'm going to be sharing with you a quick monthly breakdown on the SPY along with a quick weekly chart breakdown. What this is going to do for you is it's going to give you a better understanding on what can potentially happen heading into October. Now, what I'm also going to be doing is I will be sharing with you our trading plan heading into this week. I'm going to share with you our new key levels where we are interested in buying call options to make money right before the market reverses, right before it spikes, and where we're interested in buying put options to make money shorting the market right before it reverses, right before it crashes. And then towards the end, I'll be giving you my price ladder, which is going to break down every single level that you need to be keeping an eye on to understand where price is headed. Let's get straight into the analysis. So in terms of the monthly chart, this right here, each one of these candlesticks represents one month's worth of price action. And I just wanted to point out 2 patterns that I'm potentially seeing. Now, I'm not going to be blindly trading based off of what I'm seeing, but I will use this as a tool if I do see some sort of confirmation when I'm trading what I actually see and I react properly to that, as a better understanding on what can potentially happen and what I should be focusing on if I confirm that that pattern in history is repeating itself. So in terms of the monthly chart, you can just visually see right here. If you look right here, you have like this red candlestick right here, and then you could see you have these red candlesticks right here. So what happens when SPY forms these red candlesticks on the month? Well, overall, it tends to bottom at the previous month's lows, and then it spikes. So that's what tends to happen in a sense. You can see it had a small drop, but overall, it tends to bottom at the previous month's lows, and then it tends to spike. Now, if we were to have that drop that occurred right here, I do believe the bottom would be $420, which would be my best level for calls in terms of swing trading if this pattern were to repeat itself. So that's just one thing that I'll be keeping an eye on. Now, another pattern that I wanted to show you is this. You have like this red bearish candlestick right here, and then you could see you have this red bearish candlestick right here. What did the SPY do? It ended up bottoming slightly higher than the previous month, and then it had a very bullish month. So that is another possibility. But based off those 2 patterns, what can we understand? We can understand that there's going to be very, very good dip buying opportunities for day traders and swing traders because it's supposed to try to recover overall. Now, another point I wanted to bring awareness to is this. You can see right here, the SPY had all of this resistance. Look at all the resistance you had on the SPY. You see all the resistance towards 416 and 420. You had a lot of resistance right here towards 419, right? Well, when the SPY had a massive breakout above this resistance, it went all the way to 460. And now that it's dropped back down to that previous resistance, as you know, it's supposed to react to support. It's supposed to start to bottom out. So if this wasn't the bottom, in the back of my mind, I already know in a sense it's going to try to recover and go bullish this month, even if it drops lower. And if it does drop lower, my best level for calls possible as of now would be $420. So that observation, with the previous resistance supposed to react to support because it created a massive bear trap when it broke out. And then when it tests for the first time with the strategy supposed to react to support, basically what my strategies have told me and what the monthly chart has told me is that it's going to try to have a recovery month. And the bottom is going to be towards this, the past month's lows, towards this 421-ish level, or towards 420. And then we're going to start to recover. So I will be focused on buying call options at my key support levels. And since it's going to try to have a recovery month or a bullish month, right? So recovery month means it's going to try to drop a little bit lower, then recover. A bullish month means it's just going to kind of bottom out towards the previous month, and then it's just going to go bullish. But with this understanding, I will be very strategic with the way I do put options and the way I short the market. So in terms of how I'm going to be entering this month with my focus in terms of shorting and buying put options, it will be at key resistance levels that have not been tested. It will be at the gap close reversal levels that have not been tested. I will be 10 steps ahead of everybody else because I know where price is going to have a small pullback, even if it's overall bullish, right? I'm a scalper. And I know when those levels are going to hit before they hit and when they're tested. You have to trade them the first time. So let's break this down. Now, what we need to understand, I'm going to do a quick just briefing on the weekly chart as well. So again, weekly chart, it's saying that it's going to just try to have that recovery. You can see right here, this is all the previous resistance towards 417, 420, same candlestick right here, same candlestick right here in a sense, right? So the SPY is just, if it goes bearish, there's just going to be good dip buying opportunities, right? That's just what I'm getting from this. And the previous resistance is continuing to react to support, as you can see in a sense, right? So that's my overall view on monthly and weekly chart. Now, I'm not going to trade blindly with that pattern. I'm keeping it in the back of my mind when I'm trading what I actually see. I'm not going to let that blindly bias me into entering trades. I have to actually see a reason to go with that thesis when the candlesticks are actually moving and when the market is not closed. So in terms of call options, what are going to be my key levels for call options? Let's break it down. So in terms of my key levels for call options, this is going to be fairly simple. The best thing you could do possibly is to go with key oversold levels, and the ones that are going to be the best are the ones that have not been tested. So I would say my first level is going to be this level right here, 424.80 to 425. That is key support that has not been tested in a sense. Now, do I value that to be a special level? No, I do not, because it already played out in a sense, so it's nothing special. But in terms of a quick scalp, I will keep an eye on it, but you have to be very strategic and very professional to consider trading that, and that's something you should consider lighter size if you do end up doing that, right? So look for strong bullish confirmations if you go with that lower level. Another level that I'm keeping an eye on is our support at 423.80 to 423.50 zone. This is key support in a sense. Do I value it to be anything special? No. The levels that I value to be special are the ones that have not really been tested in a sense, the ones that have never really been hit in a long time. This is going to be my first special zone for calls. So the other levels are not the best, but they're going to be considered good levels for scalping that I will keep an eye on. I'll have very high standards with the confirmations that I use, right? Now, I have levels where I don't even use confirmations and I kind of just get in. My confirmation is the plan that is brewing and what I'm seeing beforehand, before the candlesticks even move and hit that level. I have those levels too, and these will be those levels. So in terms of those levels, or like in a sense, I don't even need confirmation, but I still use confirmation because, again, I trade what I see. I don't just blindly enter a trade, but I do have a strategy where I can blindly enter a trade and it will work for the vast majority of the time, but sometimes it won't work. And then that's where trading what you see comes in handy, because if you trade what you see, you're going to have a better understanding if the level is going to work or not. But these are the best levels. 421.80. We have a gap to fill at 421.80, and last week's lows, 422.29. That is key support that has not been tested, gap close reversal strategy. That's an amazing level for call options. Now, the level below that, if we go bearish and SPY wants to go lower, $420. $420 will be the level below that. And then in terms of, let's say, the monthly chart goes super bearish and it has that big drop overall first, earlier into the month. The last level I have for calls is going to be 416.70. That's my last level for calls. At that level, I would just blindly swing trade in a sense. That would be my true last level for call options. There is so much support. It is such a strong level on the monthly chart. And based off that pattern, if the SPY were to go kind of bearish overall at first, if it were to have that where it pushes lower, under that 422.30 previous week's lows, 416 would be the best level you can get possible. 416.70, 416.70. But again, I love 420, very interested in 420. And I'm keeping an eye on 421.50, right? So you have to understand, I'm seeing multiple patterns with the candlesticks. So it's my job and responsibility to trade what I see and see if that pattern is going to repeat itself, along with just understanding which key levels would be the best, right? So this is just preparation I do beforehand, right? When I'm trading the chart, things are different. So let's get into it. Now, in terms of our overall understanding of where we are at in the market right now, that I gave you my levels for calls, this is where we're overall at. there is resistance. We have resistance right here at 432.20. We called the exact top. We all did put options. We all went short. We prepared for that a week in advance, right? And then the day before that, we even prepared 429.50 for puts a week in advance. Unfortunately, I didn't take that one. That was my red day where I went against it in a sense. But anyways, we did phenomenal. I literally called the exact top in my videos 2 days in a row. So SPY is closing the gap. It's closing the gap. It's having a reversal. It's trying to go bearish. When it hit our 432 level, it flipped bearish. Red 30-minute candlestick confirmed it. Now it's trying to go bearish, right? So basically, this is what you need to understand in terms of where we are visually at within the market right now. The SPY is trying to go bearish. It's trying to have a gap close reversal. Now, this is the battle. This is the battle zone. This is what I want you to understand. So the previous closing price, 428.52. What was this level? This was support. You see how there was some support here at 428.52. Well, right now, SPY's trying to have a gap close reversal. It's trying to go bearish. It's trying to crack through the support, bounce back up. It's trying to turn that previous, support level, previous day's closing price into a resistance level. It's attempting to flip bearish. So this is what you need to understand in terms of the battle that we are at. The bears are trying to gain control. They're trying to turn this previous support into resistance. Now, what they need to do in terms of to gain some control, they need to maintain 427.50 as a resistance. If they maintain 427.50 as resistance, we will drop to 424.80. That is where the SPY is going to start to go. It's going to start to go to 424.80 if 427.50 reacts as a resistance. See, this is make or break. 427.50 was support. It went to 432. 427.50 right now, it's in the middle. They're closing it at the middle, but the bears are trying to gain control because this previous support is trying to react as a resistance, but the bulls are hanging on for life too because this previous resistance is trying to react as support. So what I'm telling you is the middle zone right now is this 427.50. It's make or break. If 427.50 reacts bearish, they're going to drop it. If it reacts bullish, they're going to spike it. So that's what you need to understand. If this 427.50 reacts bullish, they're going to try to rocket this to fill the gap at 432 because it still hasn't filled yet. Now, if 427.50 reacts bearish, they're going to try to flip it a little bit bearish. And even if it goes overall bearish, they will try to bounce it first at our key support levels for scalping calls, which is 424.80, 423.80 to 423.40, and then our best levels that we're really interested in is 422.30 to 421.80, along with $420, right? So that's where we're at right now. The SPY is trying to have a bearish gap close reversal. It's trying to turn previous support into resistance, but it's also trying to turn this previous resistance into support, so it's make or break on the middle. We're make or break, we're on the line right now. So we're simply just looking to determine if it reacts bearish or bullish. If the SPY has like a massive gap up, then I will be interested in buying calls at 427.40. If the SPY has a massive gap down, that would influence me more to do puts at 427.50. So that's one trick I do. But in terms of that trick, I would encourage it more towards massive moves, meaning it has a nice big gap up or a nice big gap down. So that's one way that will give me a better understanding using, gap close reversal strategies. So if it has a big, massive gap up, then yeah, I would love to buy calls at 427.50. It's flipping bullish. If it has a big gap down, then yeah, I'd love to do puts at 427.50. It's flipping bearish. And I use very tight stops in those situations. Now, if it's a small gap, then I don't value it as much that way. It's more of just like trading what I see in a sense, right? It's more just understanding if it's reacting bearish or bullish when the level hits. But if it has a big gap up or a big gap down, I'm more biased and I'm more influenced that it's going to reverse when the gap fills. So that's another thing you need to understand, right? That's why I was so bearish at 432 because the SPY gap down from 432 and it was a big gap down and then it sold off 10 points. So if it's going to sell off 10 points from the gap and then spike 10 points back up to the gap, automatically, I'm just going to be short biased when the gap fills because it's a 10-point drop. First time it hits, it's probably going to reverse, right? So what I'm telling you is if we have a big gap up, that influences me to buy calls at 427.50. If we have a big gap down, that influences me to buy puts at 427.50. Now, if it's just a small move, I'm not really influenced in a sense to do calls or puts at those levels unless I'm seeing something that's brewing, right? In terms of what I see brewing is, like I said, the market, it's going to try to have either a recovery month or just a bullish month. That's what it's going to try to do. So that's what I'm talking about brewing beforehand, right? So you got to stack all these things that I'm seeing together in your favor. So we'll see how it reacts. But if it's a small gap up, I'm just going to be having some focus if it reacts resistance or reacts as a support. But based off of what I showed you with the monthly chart, it's supposed to try to kind of like retest the lows or even crack the lows. So with that information, if we didn't have a big gap up, I would just look to see how we react to 427.50, and I would just focus on my calls at the key oversold levels. And then if I see a bearish reaction at 427.50 gap, then I'll do the puts if there's not a big gap up. Now, in terms of the key price level breakdown, in terms of my new levels for puts, right? So we're eyeing 427.50 if it reacts bearish, but true special levels are still considered to be 432.20. The gap has not filled yet, but it did already play out partially in a sense, but we're still interested in it. We're still interested in doing puts and going short at 432.20. Our next level is going to be right here. We have some key resistance at $433 that has not been tested. Nothing really special. I'm just keeping an eye on it. Nothing too special. Some special levels are going to be this 435. We have a lot of key resistance at 435 to 435.50 that has not been tested. And then true best level above that is going to be 438.60. 438.60 to 439 zone is going to be your best resistance for puts, gap close reversal. So you have to wait to trade these levels at the best setups at the best prices. And if you trade them properly, you should do very, very well as a trader. And then in terms of Trader Society, we do so much more. We trade the price ladder if there's a confirmation. We trade other levels and other patterns in a confirmation. Again, this is all I can really give you in terms of making like a trading plan analysis. But I'm telling you, if you stick to this and you trade these levels, you should do phenomenal. But you have to be disciplined enough on your own to do that. Within Trader Society in real time, we're always instilling discipline. We're always instilling our key levels. We're always instilling if we see a reason to enter at our key level, or if we see a reason to enter at our, trading level, along with alerting every single trade that we make in real time. So those are some differences so you guys understand that, right? But I'm doing the best I can possibly do in terms of making these videos before market opens. So with that being said, in terms of the price ladder that I gave you, the best level for puts, best level for calls, this is going to be the price ladder. So I already gave you the best levels. So if you see a different level, that's nothing really special. So if we trade a level that's not really special, we usually size down and we need a very strong confirmation. So in a sense, this is just to give you a better understanding of where price is heading, if something reacts bullish or bearish, if it reacts to support or resistance. So this will be the levels. We're going to start off, so we're just going to keep the focus on this week. So 438 to 439, best level for puts possible. Very, very unlikely that we hit that this week, but we shall see. 435 to 435.50, key resistance. That's an amazing level for puts. 433 is okay. That's key resistance. What's the next level under that? Next level under that is fairly special, but it already played out, so I dislike it in a sense, but I'm still interested in it in a sense. 432.20. It's a great level for puts. The gap still hasn't filled yet, but it did already work and play out. So I'm going to need a strong confirmation to do puts there, right? Because it already worked out for me. There's no way if I trade a level that worked for me and then I trade at that same level again, that I'm giving back the profits that I made on that level. I can assure you that. So, and that's where risk management comes in. And then that's just where using the proper game plan comes in with trading what you see using proper confirmations. Next level under 432.20 is going to be right here. $430. This is the next level it drops to $430. I am not interested in that level. It will attempt to drop first very, very quickly for a scalp, where if those 430 puts go out of the money, it's probably going to drop back in the money first, but I'm not too interested in it. I don't consider that to be a best level. Next level under 430 is going to be 428.50. I'm not too interested in this level, but that's a make or break zone. The make or break zone is this 427.50 to 428.50 zone. That's your make or break zone. So if it breaks out, reacts bullish, forms support, then it goes bullish. If it breaks down, reacts bearish, then we go a little bit bearish, right? I'm not too interested in that level personally, but I will be keeping an eye on it. 427.50 is the gap. I am very interested in trading the gap. I already explained to you how I'm planning to trade that. The next level under 427.50 is going to be $426. This is some support. It will attempt to bounce first, but I'm not interested in this level. For calls, I want more oversold levels. So the next level under that is going to be $425. This would be one of my lowest value level for calls if the SPY opened up flat in a sense. I'll be keeping an eye on this 425, 424.80 level. The next level under that is going to be 423.80 to 423.40. The next level under that is going to be, and that's just the key support level where I'm interested in calls as well, but I don't value that to be anything special. Next level under that is going to be 422.30 to $420. This is what I would value to be a very special level for calls because it's a gap close reversal level and the gap has still not have been filled yet. SPY just recently partially filled at the 432, so it recently just partially filled at the 421.80 gap right here, right? So we're keeping an eye on potential further reversals at these levels with understanding, though, that they did already work. SPY partially filled out this gap, right? So I'm keeping an eye on 422.30 to 421.8 gap close reversal zone for calls. Next level below that is going to be 420. That would be an amazing level where we should bounce first. Next level below that, this could be the absolute bottom of the month if it went super bearish and lower, like one of the patterns I showed you. 416.80. Man, I would just like swing trade calls at that level. That'd be truly amazing. So that is my price ladder. And just understand, if it reacts bullish at one of those levels, it goes up to the next level. If it reacts bearish at one of those levels, it goes down to the next level. And in terms of how quickly that happens, the chart is going to tell you. The chart will tell you how quickly it can happen, right? So like, for example, $430 was one of the levels, right? And then if it goes to 430, it's supposed to go to 428.60. How long did it take to happen? The chart gives you the answer. It took an hour and 30 minutes to happen. So it's going to repeat in similar cycles. The chart is going to help you measure price. Where is price supposed to go if this reacts bullish or bearish? And it's also going to give you a better understanding on how long the price is supposed to get there. So you have an understanding. Now, I trade the 1 minute and the 30-minute chart. That's my style of trading. I'm a scalper. I'm not a day trader. Now I do have strategies and I do have levels that you can day trade at. And in terms of those levels, you're going to want to go with the ones that haven't been tested. The best day trades are at the levels that have not been tested, the overbought ones for puts that have not been tested, and the oversold ones for calls that have not been tested. And I gave you those levels, right? So obviously the lower ones for calls have not been tested, the higher ones for puts have not been tested, right? That doesn't mean that I'm going to day trade at those levels, but I'm giving day traders what they need, and I'm giving you a better understanding on where bigger moves are going to happen for the best possibility possible for day traders, right? So I scalp very, very quickly using, 1 minute, 30-minute patterns along with daily chart and everything else that I'm doing. But that's our overall game plan. That's what we're interested in doing. We don't blindly trade the chart. We don't blindly become biased by anything. We do beforehand preparation on things that can potentially happen. And if we see that those things are potentially happening because we trade what we see, then we align ourselves with that pattern that history is going to repeat itself. That's what we do, right? I'm not a magician saying that, it's going to bottom here at this exact level. I'm going to buy calls here. Now, I do have those strategies where I genuinely believe it's going to happen and I'll just get in because something's brewing beforehand. Those are rare situations with rare patterns, and those are levels that have not been tested, right? But I'm always trying to trade what I see, but I do have understandings on levels where I just have to get in and just kind of, you could try to day trade it, or I just get in a sense, right? But I always try my best to trade what I see. So I have a lot of different strategies and a lot of things going on and brewing. You just have to understand how it all works. So with that being said, I'm going to be signing off here. If you do want to be a part of Traders Society, that's going to be the first link down below in the description. It is a one-time fee and you get lifetime access to the entire program. If you would like to know what's included, it's all explained in that first link down below in the description. Basically, if you want to trade live with us in the chat room, real time, and you want my real-time analysis, my real-time price action analysis as the market's moving, as we're trading what we see, if you want our real-time trading alerts, if you want to be surrounded with multi-millionaires who are alerting their trades in real time, if you want to be surrounded by scalpers, day traders, swing traders, and investors in the right community, it would be the greatest place for you because we understand the trading strategies and how price action works to profit within the market. And I'm telling you, not only are we teaching the trading strategies, but we are instilling the discipline and the consistency needed to be successful as a trader. The results are speaking for themselves in terms of the people in the program, along with my trading results. I'm going to leave it off at that. If you're serious about starting off this quarter strong and finishing the year, finishing the year very, very strong, and laying out the proper foundations to set you up for success for 2024. This is the best time to join Trader Society. It is the first link down below in the description. There's no coupon code. There's no discounts. The price only goes up. You will see within the next 3 months on what happens, And it's going to be absolutely crazy on what's going to happen. So stay tuned.